Assalamu alaikum, everyone. I hope you've had a great week. Jummah Mubarak, inshallah. Today, we're going to go over the recent happenings in the market, and based on those happenings, my 1 to 3 month outlook for assets and where I'm planning to position myself during this immediate near term. So, without further ado, let's get started. As always, this is not financial advice, so make sure to do your own due diligence before making any investment decisions. If you are not a member, consider becoming a PIF member where you can follow my investment decisions move for move. And you can also join and link up with many other halal conscious investors. We have a really nice community going on, and I hope you can be a part of them. So, today we had the jobs growth number, and it blew our expectations out of the water, or analysts' expectations out of the water. So we had more than 350,000 jobs created in the US versus 180,000 expected. Now, on the surface, you may say, wow, this is really great news. And in fact, it is good news for people with jobs and people who benefited from those jobs. However, the Fed may be looking at this and saying, well, for sure, it's looking at this and saying, well, the economy isn't broken yet, and therefore there's less pressure on us to reduce our monetary tightening in the form of higher interest rates. There's less pressure on us to discontinue that policy until we see inflation actually reach the 2% or very near 2%, which is what our mandate requires. So there's less pressure on the Fed to reduce interest rates, which means that interest rate cuts may not happen until later in the year, even though the Fed and pretty much all observers are expecting them to happen this year. So there's no change on the expectation that they will happen this year. It's just that may happen later than people initially expected. Not only this, but the earnings or hourly earnings of workers. So not only job creation was stronger than expected, but the hourly earnings was stronger than expected. So we have 4.5% growth in hourly earnings versus 4.1% expected. So this means that there is additional pressure on prices. So people are working and earning more than expected. So we have an economy that is robust, and we have earnings or wage pressure supporting prices, which all leads us to believe that interest rate cuts may not come in March. They may come later than that. And then finally, we have geopolitical tensions. I think this is perhaps happening right now or just happened, where the US launched retaliatory strikes in Syria and Iraq after a drone attack on one of its bases in Jordan. So this leads many to believe that the issue with the Red Sea and the blockade there that the Houthis have imposed may not be resolving itself anytime soon. And since shipping has to take a longer route, a more expensive route, mainly to Europe and the United States, prices may rise because of this. In fact, we've already seen the prices of some materials rise because of this blockade, and these tensions don't seem to be simmering down. They, in fact, seem to be building up with time, and so there's no telling what this is going to do for inflation in the near term. All of this has caused the expectations for a March cut in interest rates to fall to just 20%. Keep in mind the expectation at the beginning of the month was close to a 70% expectation of a cut. So instead, at the end of, at the beginning of January, I should say, there was an expectation of around the 70% probability of an interest rate cut, whereas that probability has dropped to just around 20% today. And this is one of the reasons why you've seen many assets actually depreciate substantially. So, when interest rates are higher, investors tend to allocate more towards, interest bearing products and less towards equity products. And so this is putting pressure on equity prices. However, there are still some assets that are relatively immune from, although not completely, but have other confluence of factors actually that are supporting them. And one of them is Bitcoin. So if we zoom out a bit, the Bitcoin cycle right now is in its second year, which tends to be extremely positive if we looked at the previous cycles. And when you add to this the fact that we have the Bitcoin halving coming in, just about 75 days, and the compounding effect of the Bitcoin ETF, where at this point we have around 4,000 Bitcoin on a daily basis being taken off the market, all of this suggests that Bitcoin, although it too would benefit from an interest rate cut, there are still many near term catalysts supporting its price. So while equities and perhaps commodities may be under pressure in the near term, in the next 1 to 3 months, Bitcoin still has a confluence of factors that suggest that its price could climb higher in the near term. And very correlated with Bitcoin, you have altcoins. And among these altcoins, we see Solana. If we just look at the last 3 months growth, and here I like to focus on growth because this is this tells us what's around the corner as opposed to what's in the rear view mirror, which is what looking at absolute numbers tells us. So if we look at the change in daily active addresses, we're in the 300 percentage points if we look at the 3 months change in terms of daily transactions. This is less of an important metric just because different blockchains define transactions differently. Some have very small transactions, other have very large transactions. So just looking at the count of transactions is perhaps not the best approach. If you look at the total value locked, I think that's a better approach. So you have 270% growth for Solana in the last 3 months. In terms of volume on their decentralized exchanges, 890% growth, and fees collected, you have close to 1,000% growth just in the last 3 months. And these numbers just blow out of the water its nearest competitors, including Ethereum, and this is on a growth basis. So if we assume that the correlation between altcoins and Bitcoin remains strong, as it has been historically, and the fact that Bitcoin has some near-term catalysts that are immune to some of the other downward pressures that are being exerted on equities and other risk assets. From this, I come to my 1 to 3 month outlook for major asset classes, which is telling me that for the stock market, I have a neutral rating with a slightly bearish bias. For commodities, it's the same neutral rating with a slightly bearish bias. But with Bitcoin, I have a bullish bias, which includes some of the major altcoins that are strongly correlated with Bitcoin. So that was my overview of the markets as they stand today and what I think is basically the need to know for investors at current time. I hope you found this beneficial. Make sure to leave a like if you did and become a PIF member if you aren't already. Let me know what you think about my market outlook and whether you agree or disagree in the comments. And let me know what you'd like me to talk about next week, inshallah. Until then, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.